In 2020 and 2021, we saw the housing market boom because everybody wanted a home that they could now work from home from, and on top of that, we had the lowest mortgage rates ever, so everybody was trying to buy a home. But things started to change in 2022 because of how fast interest rates rose. In the beginning of 2022, you could buy this home for $400,000 and pay $1,500 a month. By the end of 2022, homeowners were saying, wait, I want to buy the same home that my cousin bought in the beginning part of 2022. Now I have to pay a little bit more. Fine, I have to pay $428,000 in December of 2022 versus the $400,000 you could have bought it for in January of 2022 because we saw home prices rise by around 7% in 2022. But the big difference was now you're going to have to pay $2,500 a month as opposed to the $1,500 a month your broke cousin Bunty was able to get it for because they were able to secure a lower mortgage rate. These higher mortgage rates made it much more expensive to buy a home, and on top of that, home prices also rose. Now here we are in 2023. Interest rates will continue to rise, and the 2022 housing market slowdown is spilling over. But if you really want to dive into what's happening in the housing market, you have to understand what's going on with home builders. And the big news for me in 2022 was when Toll Brothers reported that home buyers were canceling 20.8% of their new home contracts. What Toll Brothers said was that in July, August, and September, not only did they see a 60% drop in new contracts being signed for homes, but 1 out of 5 of the contracts that they did have signed, home buyers just walked away from. And some of these home buyers walked away from their earnest money deposits. They walked away from the cash that they put down because they couldn't afford the higher monthly payments. That was the news that we got in 2022. Now, in the beginning part of 2023, KB Homes gave their report on what happened in October, November, and December of 2022. And what they said was they saw a massive uptick in the cancellations. They didn't see a 20% uptick in the cancellations or a 30% or even a 50% or even a 60%. But they saw 68% of their gross home orders canceled. Let me read you a little quote from what the CEO of KB Homes had to say about it. High mortgage rates and persistent inflation together with an uncertain economy have made home buyers more cautious since the middle of last year, 2022. There are essentially 3 different factors coming together right now which are putting downward pressure on housing market prices. Now, we've been covering all of this in market briefs, including the stories from home builders. If you want to stay up to date on what's happening in things like the housing market, our economy, the stock market, crypto, and the global economy, Market Briefs is a super easy to read email, and it's completely free, where every day my team is breaking down what's happening in the financial markets into a fun, witty, and easy to read newsletter. So if you want to join Market Briefs, it's completely free. And I'll put the link to how you can join Market Briefs for free down in the description below. The 3 factors that are contributing to the downward pressure on housing prices are 1, high inflation, number 2, higher interest rates, and number 3, a slowing economy. The high inflation means I don't want to go out and buy a home right now because I can't afford the higher prices of homes, especially because I can't even afford the higher prices of eggs. And I should also mention that these high inflation numbers that we're still seeing is contributing to a slower economy because now the prices of everything is rising so fast that people are having to cut back on their spending, which is contributing to a slower economy. Higher interest rates means that buying that $400,000 home you were thinking about buying is getting more expensive, not because the home price is rising, but because the cost of borrowing that money is rising. And I should also mention that these higher interest rates are putting downward pressure on the economy because when interest rates go up, the cost of borrowing money goes up, which slows down spending. Less people are likely to refinance and spend money. Less people are likely to go into debt on their credit card, even though we are still seeing credit card debt rise. But it means that your interest payments on your credit card debt is rising. Less people are likely to go out and borrow money to get a car because the cost of borrowing money goes up. But it also makes homes less affordable, even if home prices don't change, because you have to pay more money to borrow the money to buy that home. That puts downward pressure on housing prices. And a slowing economy means I might not get my raise or my bonus or my promotion that I was hoping for because my company is not doing as well, or if things get even worse, this could also mean that I might get laid off or I might lose my income. And in that case, again, this puts downward pressure on housing prices because if incomes are not rising, if people aren't making enough money, or if people lose incomes, well, then people don't have the ability to buy more homes and people don't have the ability to keep making the housing payments. So this also has downward pressure on the housing market. These 3 factors are why we saw home sales drop almost every single month in 2022. It started with high inflation. And then in the second quarter of 2022, we added this, the higher interest rates. And then further on into 2022, we kept seeing the economy slow even further. Now here we are in 2023, we have less of this, although we still have extremely high inflation. We have this, we have high interest rates, and we're seeing this, the economy slow down even faster. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.